Credit process and analysis. In this session, we have several objectives. The first one is to understand the credit process. We'll be looking at things from both the borrower's perspective and the lender's perspective. Then we'll move on to look at job opportunities for credit analysts, including looking at the most common places that they work. Finally, we'll go in depth to look at the different ways that credit analysts perform financial analysis, whether it's for a person or for a business. By the end of this chapter, you'll have a comprehensive understanding of the credit process and the way analysis is performed. Let's look at an overview of the lending process. It all starts with origination, where banks and borrowers get connected and they discuss a lending opportunity. Then there's negotiation, where the lender and the borrower discuss the amount, the interest rate, and some of the covenants that may be required as well. Ultimately, at this point, the borrower submits an application for the loan after some discussion has happened. Then there's the underwriting process. During the underwriting process, the lender will look at the borrower's eligibility based on financial analysis and risk analysis. Following that is documentation, where the documents and agreements are put in place between the borrower and the lender. And finally, there's closing, booking, and funding. The new loan will be added to the financial institution's loan book as an asset. The borrower receives their loan as a liability and the cash, of course, that goes on his balance sheet. After the loan has been put in place, ongoing credit analysis will happen to monitor the loan. This entire process may take anywhere from a couple of weeks to several months, depending on the size of the loan, the detail and complexity of the loan, and the speed at which the borrower and the lender are willing to move. The job of a credit analyst is to assess the risk of making a loan to an individual or to a business. That means they spend a lot of time analyzing financial risk and looking at financial statements. For example, a credit analyst may perform an analysis of a company's history using historical financial statements. The analyst will look at the company's margins, the trends, and calculate ratios to assess how much they think the company can borrow. Credit analysts need to manage all of the financial information that goes into a credit application and fill out all the documentation that supports that application as well. Now let's take a look at the skills and the credentials that are necessary to become a credit analyst. Analysts will have to have a bachelor's degree as a minimum, and it's often in finance, accounting, or other business fields. However, many credit analysts do come from bachelor's of arts degrees or other non-business backgrounds as well. It's important for credit analysts to be strong users of the Microsoft Office suite of products and really good at using computers to perform analysis, complete documentation, and to stay organized. It's important for analysts to have strong analytical skills that apply both to quantitative factors as well as qualitative factors as well. Analysts need to understand financial statements, be able to calculate and interpret ratios, and have a solid understanding of both financial and accounting concepts. In later courses and lessons throughout the CBCA program, we'll be going through in much more detail and really teaching you the underlying skills that are needed to become a credit analyst. Credit analysts often work at banks or financial institutions that accept deposits and then use those deposits as a resource to make loans to customers. Another common place they work is with private lenders. It could be a person or organization that lends money to people that are typically higher risk and may not qualify with a bank or just don't want to borrow from a bank. These private lenders typically charge higher rates due to the higher risk involved. They also work in corporations. They may work in the Treasury Department, for example, being involved with cash management, where they would optimize cash flow, look at lowering the cost of borrowing for the company, and increase the income the company earns on its cash or its other investments. Another area they may work in a corporation is with the customer credit department for companies that actually extend credit to their customers. Additionally, credit analysts often work as institutional investors, examining credit investment opportunities such as bonds or other securities that institutional investors may want to invest in. They may work at rating agencies, where they are responsible for creating the ratings for banks, corporations, or anyone that issues debt. Examples would be Moody's or S&P. And finally, credit analysts may work for government agencies, where they analyze the credit of state-run banks, insurance providers, and other parts of regulated industries. As you can see, there's a wide range of career opportunities for credit analysts.